My name is Sylvan J. Rahman. Welcome back to Intentional Wealth. In today's video, I'm going to be really passionate about something that has been irritating me for the last few weeks, ever since one of the presidential debates. There is this post that has been going around about something that Bernie Sanders has said, and it's highly misinformed. It's just completely wrong. And the first time I saw it, I ignored it. The second, third time, I started making comments, but now I've been seeing it now at least 7, 8 times. Come on, guys, this is wrong information. You should know better. And what is that information? What is that post? Before we get into that, let's go ahead, subscribe to the channel, and click the bell icon so you're notified every time I release new content. I'm not asking you, I'm telling you. In the wise words of Peter Griffin,
you know what really grinds my gears?
So the post that's been going around that has really been grinding my gears is this post, and there's been many variations of it, but the one that I've seen the most is from this group called Deplorables or whatever. And the post basically said, Bernie Sanders said at the debate last night that he wants the minimum wage to be $15 an hour. I personally agree with that. I would love a $15 minimum wage, but you're still not making a lot of money if you do. This is how the math breaks down in this post. $15 times 40 hours a week equals $600 a week. 600 times 52 weeks per year equals $31,200. Now, I don't know anybody that works full-time 52 weeks per year, but that's a whole nother story. It goes on to say that Bernie Sanders wants free healthcare for all and was asked how he would pay for it. His answer was to raise taxes to 52% on anybody making $29,000. And that's where it's wrong.
Wrong.
That is absolutely
Wrong.
Anyway, let's finish the rest of the post, and we'll come back to it later. 52% of $31,200 equals $16,224 in taxes. $31,200 that you made through the year minus the $16,224 in taxes equals $14,976 for your pay. Now you take that $14,976 and divide it by 52 weeks that you're gonna work supposedly full time. That breaks down to $288 per week. Now, $288 divided by the 40 hours that you're gonna work per week equals $7.20 per hour. And it goes on to say, so much for the $15 minimum wage increase.
Guess what?
It's wrong. It's all wrong. I love math, but that is not how tax brackets work. Tax brackets are a total different thing. Just because you fall in a certain tax bracket does not mean that's what you're paying in taxes. Now, how does this work? Well, let's get into this. You really need to understand what tax brackets are and how it makes the post wrong. This is the IRS tax bracket system. It's the federal income tax bracket. There are 4 categories of tax brackets. The first one is single, the next one is married filing jointly, third one is married filing separately, and the fourth one is head of household. For this video and for these purposes, we're gonna talk about if you're a single payer household. And these are also the tax brackets for 2019, where you would pay taxes in April 2020. Now, the tax brackets for 2020 that you would pay for next year are a little bit different. But since it's not April 2020 yet, we're gonna use the 2019 tax brackets. Now, there are 7 tax rates, and this is how it breaks down. If you are making $0 to $9,700, you're gonna be taxed 10%. If you're making $9,701 to $39,475, you're gonna be taxed at 12%. If you're making $39,476 to $84,200, you're gonna be charged 22% tax rate. If you're making $84,201 to $160,725, you're gonna be at the 24% tax rate. If you're making $160,726 to $204,100, you're gonna be charged a 32% tax rate. If you're making $204,101 to $510,300, you're going to be charged a 35% tax rate. If you're making $510,301 and over that amount, you're going to be charged a 37% tax rate. Now, how does this all work? Does that mean, Sylvan, I'm making $60,000? Does that mean I'm going to be charged a 22% tax rate?
Hell no!
That means that anything over $39,476 to $60,000 is going to be charged at 22%. This is basically a graduated system, and those are the tax brackets. You start with 0, and that first chunk is going to be charged at that first tax rate. What's left goes to the next chunk, and what's left goes to the third chunk until you're done with your income. And that basically gives you an effective tax rate. Now let's see how that actually plays out with real numbers. Just because you make $100,000 in income and you fall in the 24% tax bracket doesn't mean you're gonna make $24,000 in payments to the IRS.
That's not how it works. That's not how any of this works.
So how does it work? This is how it works. The numbers I'm going to use for this example is actually the average of what a single taxpayer made in 2019. In 2019, a single taxpayer made, on average, $40,100. Now, you automatically get a deduction that is tax-free of $12,200, bringing your taxable liability to $27,900. Now, this is where people get stuck and people don't understand. With that $27,900, that first chunk of $9,700 is gonna fall in that 10% tax rate. So that means for that first $9,700, you're gonna pay $970 in taxes. Now you minus that $9,700 from your taxable liability of $27,900, and you're gonna end up with $18,200 that's left over. That $18,000 falls in the 12% tax rate, and you're gonna be charged $2,184 because that's 12% of $18,200. So what does that mean? That means your total tax that you're going to pay on $40,100 is $3,154. That is way less than a 22% tax rate that you would actually fall in. So now what does that mean for an effective tax rate? That basically means your effective tax rate was 7.9%, or just under 8%, nowhere near the 22% tax rate that you actually fall in. And that is where people get stuck. People automatically think that just because you make this amount and you fall within a certain tax bracket, you're taxed on all of that income. And like I said before, that's not how this works. So let's go back to the deplorables post and let's really figure out what you're gonna pay in taxes on the $31,200. Now, first of all, like I said, you're gonna deduct $12,200 because that's just an automatic deduction. That leaves you with $19,000 as your taxable income. Now that first $9,700 falls in the 10% tax rate, meaning you're gonna pay $970. That leaves you with $9,300 in the next bracket of 12%. And that 12% liability works out to $1,116. The total tax that you're gonna pay is $2,086, making your effective tax rate 6.7%. That is nowhere near the 12% that you would pay if you just thought, oh, I make $31,000, and that falls into the 12% tax rate. Like I said, that's not how this works. You got to really understand what tax brackets are so you can make an informed decision. Now, the real thing that really irritated me about this is people that own businesses were just going ahead and forwarding this information. And this is wrong, misleading, and it misinforms people. And I hate that. Here at Intentional Wealth, we try and bring you the most up-to-date information as I know it. And I try and bring you the tips, the strategies, and the tricks that I use in my businesses. And if I were to go ahead and forward a post like that, that would be totally unethical of me. Some people might want to lead you wrong because they want you to vote a certain way. I don't care. Look, don't read anything into the color of my sweater because I don't care how you vote. I mean, honestly, it doesn't bother me. Everybody's entitled to vote how they want. Now, I don't necessarily like Bernie Sanders, but I just wanted to bring you the truth so you knew what is wrong and what is right. And you know how to vote when it comes election time. Because let me tell you something. If there was a 52% tax on anyone making anywhere close to $30,000 or over, the NRA, everything that the NRA has been scared about would happen. And what do I mean by that? It would turn into a tyrannical government. Everybody would be out in the streets with their AR-15s and 14s. Biden.
I did not say that. That's not true. I did not say that.
Going ahead and protesting in the streets. Let me tell you another thing. The 52% tax rate that Bernie suggested was for people making over $10 million. Now that doesn't mean that everything up to 10 million or the whole 10 million is taxed at 52%. No, that means that the first dollar over 10 million is taxed at 52% and any dollar after that. Now let me tell you another thing. If you know someone that is making $10 million, which you probably don't, and I don't, they probably own businesses. They're not going to a 9-to-5 job, and that's not their salary. Now, there might be executive level CEOs making 10 million, but that's not what I'm talking about. What I'm talking about is real people that actually own businesses. Now, let me also let you know that if you're making $10 million, that is because that is income that you had to take. Most business owners shift the liability of taxes over to their businesses. So, what is the best thing to do? Make more money.
Yeah, man. Whole lot of race, man.
You want to get around taxes? Earn another dollar. A lot of people get stuck because they don't want to earn more money because they think they're going to have to pay more taxes. About 6-7 years ago, I met a guy that does framing of houses. He told me that he had worked with an investor that had built a couple houses and he sold the houses at like a $600,000 profit. And the thing in my mind was like, man, that dude made $600,000. How can I do that? And while I was thinking that, the framer told me, man, I'm glad I didn't have that type of income because can you imagine the taxes on that? What do I care in paying taxes if I've made $600,000? You're not going to take all of my $600,000 anyway. Even at a 50% tax rate for that $600,000, I still made $300,000. Who wouldn't like to make $300,000? Do you honestly have people in your life that make that type of money? If you do, please talk to them about how they're making that type of money. And if there's someone out here that's making $10 million a year, please contact me because I don't know anybody that's making that type of money. And I'd love to get to know you and how we can maybe do business together. At the end of the day, there is enough abundance in this world. There's enough money to go around. If you're making a lot of money, the best thing to do is make another dollar. It's also start a business on the side. Own a rental home. Even if you don't want to get into business, you love your job, own one rental home. You can shift a lot of tax liability on that. There is always loopholes, and not necessarily loopholes because loopholes have a negative connotation, but there are actual laws, tips and tricks and tax strategies and planning so that you can have less liability in paying taxes. You can have a lower tax bill. You can actually really make a lot of money and pay nothing in taxes. Look at the big billion-dollar companies, for instance. And if you think that doesn't work for small business owners like us, nope, it does. It really does. And that's why I love business. Let's get this straight. how this works. Whatever your tax bracket is, that is not what you pay in taxes. Now let's go back to that deplorables post again, and I'll leave you with this last thing. The amount for a $15 per hour minimum wage that they calculated was $31,200. If you minus your tax liability the way I did it, then you're left with $29,114. If you divide that by 52 weeks, you're left with $559.88 per week. Divide that by 40 hours. Guess what that works out to? $14 an hour. Yes, you heard me right, $14 an hour. So who wouldn't love a $15 minimum wage? I personally would love it for everybody else, but for me, that's not enough. And that's why I do business. If you like what you've seen here today, or didn't even like what you've seen, or whatever, go ahead and comment below. For the people that liked the video, give me a thumbs up. Tell me that you liked it. Let me know what you liked about it. Let's have a discussion. For the people that didn't like it, let's go ahead and debate this. Because, look, I'm not a CPA, but this is how it is. This is how it's done. All right, go ahead and follow me on Facebook, Twitter, and Instagram. Share the video, like the video, and subscribe to the channel, and we'll see you next week. Are a set of guidelines issued by the IRS